Right, good morning, ladies and gentlemen. How's everybody doing today? Today is March 10th, 2021, and I'm back with another edition of the Wednesday live show, which will be recorded and available on the website after I'm done. I always put the recording up because I know a lot of you aren't able to watch it live, so um lot of craziness since the last time I did the show here. The market sold off and rebounded, and it's been a lot of I guess you'd call it volatility, right? A lot of up and down price action, and there's just a lot of strange things going on. For one thing, the overall index is like the Dow. The Dow just hit a new all-time high this morning before I started the show in the first half hour. And as you can see here, the SPY, which is the proxy for the S&P 500, right up against the highs. I mean, basically, I don't even know if that's 2%, if it's 2% off the highs, but you can see the sell-off here, right? It was basically basically Friday was the big down day, of course. Or I'm sorry, it was Thursday. Yeah, that's right. Thursday was the big down day, and the funny thing is that the average stock, like just your average random stock out there, has gotten hit pretty hard. And, some of them are bouncing back a little bit, some of them aren't. Um, just been a lot of big percentage moves in individual stocks. And so even, this little dip, I guess you'd call it a dip, it was about 5% on the S&P. And I think the Nasdaq did correct like 10 or 12%. And so it's just kind of interesting. They talk about rotation in the market and this and that, and it really is. There's an old saying, it's a market of stocks, and that really sort of holds true right now because, as you probably know, there's a lot of individual stocks that are nowhere near their highs and certainly not reflecting what you see on the charts of the major averages. So, so there's a look at the S&P. Um, let's look at the Dow here. Look, Dow up at a new record high. So these trend lines I had drawn, there's been a couple of forays below them, as you can see, and even the Russell 2000 seems to be holding up pretty well. Um, I thought the Russell had one of the better trend lines here because of these three low touches here, and as you can see, it broke below it, and then on Friday we had that big rip roaring day higher that gained it all back, and it's just been going up since then. So kind of crazy. But the thing is, the Nasdaq is still struggling. And of course, if you've been paying attention or to the financial news, the basically the news is that higher interest rates, right? Everyone's watching the 10-year bond, and so higher interest rates are bad for growth stocks and blah blah blah. So that's what this is all about. And the Nasdaq 100 um, clearly broke. However you want to draw this trend line. So the trend lines are even more difficult to draw now. That's actually pretty reasonable there. So yeah, trend line. The market doesn't always respect trend lines, and you can't always draw a clean trend line, but get the idea, right? I mean, a trend is a trend, so could use a real short term, like a 20-day moving average or something. But anyway, the Nasdaq still struggling a little bit, and so the market is, I guess, what you would call bifurcated, and it's no huge mystery. And and so, hey, it comes down to individual stocks, right? And so, let's look at just real quick. Just want to look at a couple of the more popular names. Yeah, look at Apple. I mean, Apple's taken a pretty big hit here. And if you look at this, it was the most widely held stock on the planet probably. And you can see that Apple's trading for what it was last summer, basically. That was like last August when it broke out but it's at the same levels, and so down significantly from the high. Tesla's one everyone's talking about. It, I think it was down. Let's see, well, it went from 900 to 550. So it's down about, 33%. And then it's having this huge bounce here where it's up like from the lows to where it is today, it's up like 25% in a few days. So a lot of craziness going on there. I'm going to look at the pending trades today and see if Tesla's still on the list um, because when we were here last week, I was sort of demonstrating. Now you hate to see a stock trigger in, on a huge gap up like that, but it's all about the close. So we'll see where the trigger price is and see what the close looks like. And of course, if it does look pretty extended, and these ranges are just nuts. I mean, if you took the scale off this chart and the ticker symbol and you just looked at this chart, you'd look at it and you say, well, that's a decent pullback there, but yeah, to to think that that's 33% in a very short amount of time, and then to think that that's a 25% rebound is just wild. So look at some of the other FANG stocks. Facebook's just kind of treading water here. I think Google's been doing pretty good. Yeah, Google's up there. That was a big earnings pop there. So Google's consolidating up here at a higher level. Let's see, Amazon. Yeah, Amazon's same thing as the other one, trading for what it was last summer. So lots of ups and downs, but it's not up at the highs. So that's sort of something that's kind of interesting. And then you have stocks like Zoom, right? Which are, this thing was $580, and then now it's 350, and so you got a lot of these these former, like, remember Docu, we had a trade in this recently. I mean, look at the carnage in some of these stocks. So let's see, another one, TDOC. Yeah, there's and this, I mean, this is common. I've seen lots of stocks, tech stocks, high flyers and that have literally, like, doubled or gone up 50% and then given it all back in a short amount of time. So um, and it just kind of shows you when things get sort of crazy, it's not a bad idea to take some profits. And quite frankly, I mean, that's why our system has the target there, right? So it's always good, when you're trading, to have a target where you're going to take some off the table, and then of course, not that this was a trade, but as an example, if we were in this, there would have been a target, and then the trailing stop would have ratcheted up, and then gotten taken out. And so, you're never going to hold one of our swing trades for a big sell-off like this. It's never going to happen because of the way the system is designed to trail the stop up. And so, as you'll see when we go over the pending trades, that also gives you an opportunity, to get back in it. So, first thing I thought we'd do. Now we're down to two open swing trades. We had a few that got knocked out. A couple for just minor nicks or whatever. Um, in that sell-off, and then we had one that hit the full stop out that we looked at last week. But real quick, I just want to take a look at these two open trades. We'll start with MOH, which, by the way, is up 2% this morning. So um, still looking okay. I mean, kind of treading water, going sideways, but the nice thing here is that this stop, and this is actually pretty interesting because this stop at 209, which I've extended out here, this basically was from back over here, right? From not that long after it triggered in, basically over here a couple weeks ago. The stop ratcheted up a couple of times, made it up to 209, and then so this sell-off that we experienced last week took it down to, let's see, the low there was 209.22 and the low there was 209.40, right? So came really close to hitting the trailing stop. And then, of course, as the market's been rebounding the past few days, and on Friday we had that humongous rebound, and it went along for the ride. And so it's looking okay here, not looking too bad. And the trailing stop is very close to where it triggered in, so not an extreme amount of risk on this. And quite frankly, looking around at some of these charts, as I have recently, gone through a whole bunch of charts, and basically there's a ton of stocks that you could get into with a stop at the recent lows. Right, I see all sorts of charts, and we'll see some of those when we look through the pending trades. Because with only two open trades right now, there's not much to look at or talk about except the pending trades. And so we'll look at those in a minute. But basically, what I was saying is that you can look through a lot of charts and see that the recent lows are basically kind of a line in the sand where you could enter a trade and put a stop at the recent low, and we'll have to see what happens, see if the market can the internals of the market can continue to do well. So that's the big thing. It's all about the internals, right? Because the major averages are masking a lot of the volatility in individual stocks. I mean, if I have 5%, when someone says, yeah, the S&P pulled back 5% or the NASDAQ pulled back, 10, 12%, you wouldn't really think in the back of your mind, unless you were, really focused on this stuff, that there'd be tons of stocks that were down, 20, 30% or even more. So anyhow, MOH hanging in there, looking good. The stop is still in a really good spot here, and will probably remain there for a while until it gets some forward progress towards this target and basically above this high. So it's kind of trapped in a big range right here, but no huge big deal. So anyway, Exxon Mobil. This is the other open trade, and as you can see, extend that out a little bit. As you can see, this one's been open for quite some time. It originally opened back here on 2-3. So 2-3 and 2-4 at the open triggered in right here. I have marked, and so you can see the progression of the stop. And quite frankly, I mean, it's just a lovely chart, right? Everything about this, the way it triggered in after this trend line break here, everything about it looks really good. And I was a little skeptical when this first triggered in. I was a little skeptical because I thought it was a boring stock, but energy's kind of been, what they have been saying is one of the rotation sectors. And so, out of the high flying tech stocks into energy and financials. Financials have been doing pretty well too. So, but of course, that's it's all about the sectors. I think I remember reading somewhere that a fairly large percentage of a stock's price behavior is based on the sector that it's in, and that's very true. And even on sort of a day-to-day basis, um, that's very true. And so a lot of the high flying stocks, well, let's see, yeah, like the EV stocks, right? They got hit pretty hard. I should be able to rattle off a bunch of these EV stocks off the top of my head, but I know a few of them, and you can see. I mean, you remember they got really crazy last fall, and and so anyway, and then there's the alternative energy stocks that kind of go along with that. I mean, look at the sell-offs in some of these things. So um, this BLDP actually is on the pending list. I remember because I drew that when we were here last week, and so, but you can see just here's one of the examples I was just talking about a stock that basically doubled and lost half its value, right? And there's a ton of them out there too, which is kind of amazing. So And those type of stocks, the ones that get like really hyped up and go parabolic, they don't always just come right back. And it's kind of an interesting phenomena. So anyway, two open swing trades, Exxon Mobil and MOH, both sort of hanging in there. And so real quick, I wanted to take a look through the pending list, and we'll see what that looks like. So let me pull that up here on my other screen so I can see what we got going on. And one of the things that Jeffrey had mentioned to me, well, let's just pull up the first one. This is the one that's the most recent one to hit the pending list here is PayPal, right? And one of the things Jeffrey mentioned to me is that because I noticed that some of the stocks on the pending list, the actual entry was still considerably above the current price, and that's basically by design so that we don't get, just sort of triggered in prematurely. If this sort of it's a word I'm looking for, turmoil in the market is not over yet, which I mean it's so hard to talk about the market right now in sort of in general terms because the market itself, I mean with the Dow at an all-time high and the S&P, within a couple of percent of the high or whatever, it doesn't have anything to do with a lot of, what individual stocks are doing. Here's another good example, and there's a lot of these. So anyway, trigger on PayPal still up here, still way up here. It's past this trend line break and it's quite a bit higher than this recent price action. And interestingly enough, it looks to me like it's kind of back, hanging back above this high right here, which makes sense because theoretically, and there's lots of V bottoms that happen in the market. We see it all the time. And V bottoms in individual stocks, right? The stocks tank and then they sort of reverse and go straight back the other direction. But ideally, as a swing trader, what we want to see a bottom form, right? And so that's we're kind of obviously, you can't try and like right here, this would have been a really bad time to get triggered in. You had this sell off, and then you had a day where you had a few days of consolidation, down at these lows, and then you had this day where it popped back up, and so that would have been like the worst time to get triggered in, right before the sell off. And so, quite frankly, the way that the system is designed is that and it doesn't always happen like this because sometimes what happens is you got that trigger up there and the stock, there's like one huge day up in the market that triggers you in, but that's not really like a bottom formation. So anyway, long story short, we'd like to see a bottom formation, and then this trigger price that's sitting here right now will actually move down a little bit and meet the price out in the future, at a lower level. That's ideally what would happen. So we'll just have to see. But I mean, hey, PayPal, good company, good stock, and it has a habit of making pretty substantial moves. So that's worth considering. And the other thing is on these pending trades here is that obviously, you can't you can't necessarily buy all of them, and so it makes sense to kind of, that's what I do anyways, it makes sense to kind of look through the charts and figure out which ones really have the which ones really sort of have the type of pattern that makes sense, the good technical setup. And so this one, this Sienna, big run up, pull back along with the market. That was sort of a crazy day right there. Those sort of days always make me nervous, but hey, you never know. Stock like this can easily, you got kind of the pivot spike low there, and a lot of charts look very similar. So it's just a matter of what they look like. So Let's see, trigger on this one. Yeah, the trigger on this one is still way up here above all this stuff. And so that's another case where um, ideally, now this, this one could theoretically V bottom. This one day sort of throws everything off, but ideally the stock consolidates, somewhere between say, 49 and 51 bucks, for a few days or whatever. And then this the trigger can slowly work its way down. The best thing that could happen to some of these stocks is that they consolidate and sort of form like a base and then turn back up. So this one's not extremely appealing, but there's very little chance that it looks like it's going to trigger in anytime soon. So let's move on here. Yeah, now this it's interesting to see the previous trades on some of these things. I'll zoom in. This actually looks pretty good because you get stocks like this, and you got sort of that like this day right here. Boy, that was sort of a capitulation low, and you get stocks like this that sell off extremely hard and kind of get that capitulation low. And then when they reverse, they got a pretty good chance of retracing at least back up into this resistance. So this actually looks pretty good. I sort of like the look of this. Again, this trigger on this is way up here still, right? And let me just put that on there about where it is. There we go. Um, so one thing I want to mention is that the system itself, everything's a function of not just price, but time, which makes it kind of interesting and unique. And so the idea is that as time goes on, let me put another one on here. The trigger, like say this bases out down here and forms like a pretty nice base. Now, here's the thing, even if it V reverses or whatever, there's a lot of potential for the trigger to move down and meet it somewhere out here. So that's basically what's happening here, is ideally that this trigger price is going to shift down over the next week or so, and then the stock can theoretically like sort of base out and then meet it out here in the future at a lower price. Obviously you wouldn't, expect to get triggered in at the current trigger price, but conceptually that's sort of the thing. So yeah, V reversals are kind of tricky, and they do happen, but you typically don't want to bet on a V reversal, on any sort of stock. The ideal swing trade pattern is a stock sells off, bases out a little bit, and then begins to turn back up. So especially when they have a sell off like this, but hey, you never know. So anyway, watch the trigger on this, because my guess is it's going to ratchet down fairly quickly as we go forward here. So moving on, ZTO, there was an original trigger back up there, and I believe I used that as an example of why we used the closing price to trigger in rather than just a poke above the trigger. So anyway, let's see, where's the trigger on this? Yeah, it's still way up here. It's still basically up there. This looks like a good candidate. If there's another leg down here, this one's very likely to drop off the list. Just because they're on the pending list doesn't necessarily mean that they're going to remain there as the stock goes down. So there's a certain threshold. There's a lot of potential for a bounce here. This one can also sort of form a little bottom and turn back up, and then the trigger would slide down and meet it out in the future. All right. So the more recent that a stock has hit the pending list, the more likely that the actual trigger is going to be way far away from the price. And then as we work our way down the list, you'll see that some of the stocks that have been on here for a little while are getting like really a lot closer to triggering in. So this one's kind of nasty. I don't particularly like the look of this pattern, but it could still, it could still set up. So you never know. Sometimes I come back and look at these things. Now here you go. This is a good one because I mocked all this up last week. Here's a good example of one like what I was just talking about with the V bottom, right? So this thing looks like it turned the corner pretty quick, which is typically the sign of a really strong stock, right? So you get that sell off and then you get the turnaround, and so um, this was my mock up last week of an ideal setup where it would come down, base out in this area, and then turn back up at a lower price. But as you can see right here, it's it's looking like, well, put it this way, it's poking at the trigger right now. So, but here's the thing, as you know, so I'm gonna mark that on here. Trigger on NTCT is 29.25. And so it'd be a good time to remove all this other stuff so we can have a look at it. Here's the thing, it's all about the close, right? So it's got to close over 29.25. So if the market starts to fade, and I mean, it's early in the day, so it's all about the close. And we've seen that lately a few times too, right? Like yesterday was a weird day. The market spent the whole early part of the day, it ripped higher significantly and then sort of just, hung sideways. It hung sideways in up at the highs, and then towards the end of the day, man, it just rolled over and gave, three-quarters of the move back. It was kind of weird. And so, yeah, I mean, the market's behavior is kind of erratic right now, and so, but hey, stock like this has a good chance, a sell-off like this, and the reversal. It seems like it is a long way from the low, and so that's just sort of the nature of the beast right now because we have such an oddball sort of environment. But anyway, this one, quite frankly, it looks pretty good. So we'll see if it triggers in tonight where it closes, and yeah, I mean, after this sell-off and the rebound that we've seen the past few days, it's not going to surprise me to see a few of these things actually trigger in. So this is the one that looks like it has some potential. And like I say, like I've been saying on most of these shows, it's all about the close because, quite frankly, a lot can happen between the morning and the afternoon. Sometimes I come in here and you get some early weakness in the day, and you'll see one of the open trades like that looks kind of rough, and then by the end of the day, it's reversed and it's green. And so, same thing could happen here. This thing could reverse and turn red, and you know, not close over this trigger for a period of time. But but then again, there's probably going to be a lot of stocks similar to this that sell off and then they just reverse and form that cup and sort of go back to the highs. So I like the look of this one. Let's move on here. VNET. Yeah, this one's still well. You had a few days of consolidation. I suppose you call that consolidation. This is a big range, right? This VNet. If you look at the pending trades page, you will see that it has an average range of 6.2%, which is pretty significant, right? So, but there's potential here on this. Take a look at this one's not going to trigger in anytime soon because the trigger price is still way up here. And it's also a function, like I said, a function of price and time. So if this stock just like, stays down here, maybe sells off a little bit, if it stays down, this is going to sort of migrate down over the next few days into next week and then perhaps meet it at a lower price out in the future. So as you can see, the right now, the reason that the trigger's still way up there is because, most of the price action recently is still up at this level, right? So we're not really trying to, catch the bottom or bottom fish. What we're trying to do is well, I don't say we, but the system's designed to find stocks that, you know, are in near-term primary uptrends, have a sell-off. The sell-off sort of the sell-off basically runs its course, and the stock forms some sort of a base and then begins to turn back up. So the system's kind of designed not to jump in prematurely, and so that's the nature of the triggers sometimes being like really far away from the price. So I know I talk about that each week. Now here's one that's setting up pretty well. Let me get this line off of here. Yeah, it's just not a this is not a bad looking pattern either. Generally speaking, just sort of the nature of the way everything is designed, with what I just said, looking for a stock that is in the midst of a sell-off, just about, and not every case, but just about every case, you can draw a downward sloping trend line across the price action. It kind of makes sense. If the system's looking for stocks that are in the midst of a pullback, right? Typically you can draw a downward sloping trend line, and the trigger doesn't always meet, happen on the trend line break. But as you can see, like with Exxon Mobil, worked out pretty good, right? So this is kind of ideal. Um, you get the trend line break, and then basically the trigger price was like right there, just past the trend line break. But whoops, I went to the wrong one. But the excuse me, the trend line breaks are not always that clean. So this one, the um, the trigger price is starting to get down towards the area of the trend line break. Ideally, again, we'd like to see this move down, and ideally, you'd like to see it move down and maybe trigger in at a lower price. So a lot's just going to depend on the behavior of the stock. I mean, as you've seen, like these triggers they can move literally on a daily basis, or even every couple of days they can move, or it just all depends on what the stock does at any particular time, right? So if this stock were to sell down a little bit over the next few days, I would expect to see that trigger come down, and then like I always, I've been using the word ideally a lot lately, but ideally it would trigger in on a trend line break out in the future after some good consolidation, and something like this, like where you see like these narrow range days, right? Now this particular sell-off back here was, like I say, a function of price and time. There wasn't really enough time, and I'm not sure if that was a deep enough pullback, and it was only, basically from right there to down there, it was just a few days, and then it turned around, and so it wasn't really the type of sell-off that the system's looking for. And you can see we were actually, that was kind of a sideways chop there, and so that was pretty nasty. But this is actually a relatively orderly sell-off. So um, ideally, this will come down a little bit, but you never know. I mean, this stock could just turn right back around and rally from here. So well, let's see. Next one on the list is this BLDP, and when I was doing this last week, the trigger was way up here, and it has moved down a little bit. Not a whole lot. Not a whole lot, but it's starting to ratchet down too. This is one, I suppose you could draw a trend line like this. I don't like a trend line that like this trend line to me is not something that you'd want to that you'd want to buy on a trend line break just because there aren't a lot of touches to it. It's really steep. The stock had a tremendous sell off, and so it's really not really applicable. You will see this type of pattern a lot of times and then the rebound, but you get a lot of this, right? Especially, some backing and filling on a lot of these stocks would probably be pretty healthy, right? And so if this backs and fills, and it's a good example of what I was talking about before, where basically, stocks that haven't moved too far away from their recent lows, but are starting to look like they're turning back up. Um, Basically, it's going to be all about hanging on to holding this low here, right? And hey, you never know. And plus, the percentages on this particular stock, average range 7.6%. So that's pretty significant. This is an extremely volatile stock, but at the same time, when a stock doubles and then loses half its value, right, in a short amount of time like this, you expect a lot of volatility. So some of these stocks could easily have, a dead cat bounce that is relatively significant. So the main thing about this is just forming a base, right? So if a proper base were to get formed in this particular stock, then it could easily trigger in. If it comes back down in that, it could easily trigger in out in the future, which would kind of make more sense, right? So you get a sell-off that looks kind of like that, and then you get some bottoming in action, and then you get a move that looks like that, right? And then, theoretically get triggered in down here somewhere at a lower price, theoretically. But as it sits right now, this trigger's like way up here. So there's a lot of work to do to form a bottom in some of these stocks. All right, so just a couple left here, and Tesla. So there was the trigger in Tesla last week, and 701 is the trigger price right now. And so this is probably the best example of why we use the closing price, because they say that amateurs trade the open and professionals trade the close or whatever, and I always mention about how on TV, not that I necessarily consider them professional experts or whatever. Well, I guess a lot of them are, their credentials are professional, but I always take what everybody says with a grain of salt because everyone has an agenda. Um, but here's the thing, the closing price is what matters because this is very typical, right? Especially you get like a rebound, and anytime the market's been gapping all over the place lately, anytime that you get a big gap up, and we saw this recently too. You get a big gap up, and then there's a good likelihood that the market fades from there. So after you get a sell off, a lot of times, now of course we're talking about the market instead of an individual stock, but the same thing happens with individual stocks, right? You get a big surge higher and then a gap up the following day, and then it just fades down, and it wants to close that gap. And so ideally, after a sell-off, you get a gap down, and then kind of like this, right? Like this day right here, you were selling off, and then you had that big gap down, and then kind of rallied back into where you were. But anyway, Tesla's a tricky stock, very tricky, and um, the system uses a monthly ATR rather than like most indicators. Well, almost every charting program uses like a 14-day ATR, which is kind of odd anyways, because There's 15 trading days in a 3-week period. So the 14-day ATR is like, 2 weeks and 4 trading days. But Jeffrey has his own little hybrid way of calculating the ATR of a stock. And on the pending trades list, you see the average range. That's based on like a monthly ATR. And if I'm not mistaken, he uses a little trick where he takes the biggest and the smallest range days and cuts those off, and then averages the rest of the days, something like that. But anyway, it's a pretty good representation of what to expect as far as the range of the stock, and that's basically, so we're looking at Tesla with a 6.4% average daily range. That could potentially even go up here with this volatility. So anyhow, it's going to take a close over 701 to trigger this in, and it looks to me like it might want to come back in a little bit. So that would be even healthier price action. And so there is potential if this were to sell back down. If I just take this trend line off of here, if Tesla were to sell back down into this range and consolidate at a lower level, it is possible that this trigger price can move down. Although my guess is that would take, it's a function of time, right? And, quite frankly, I don't know if we'd want to get filled on a big rebound like this, because it's sold off sort of so dramatically that it just bounced up basically into overhead resistance. And so, theoretically, you wouldn't really want to get filled here. So I'm kind of hoping this does not trigger in today because it'd be, but then again, I mean, I always say that not to go by what I think, because a lot of times what I think, obviously the market doesn't care about what I think. And so, hey, this could potentially turn into a huge V bottom, and this thing could go from 700 to 800, without even slowing down. You just never know. So, last but not least, and this one's really interesting to me because um, you don't really see, too many low price stocks on the list. And boy, this one is just kind of unusual. But quite frankly, I mean, it's fairly well behaved, right? Fairly well behaved as far as the chart pattern goes. Looks like it trades and trades pretty well, and so very unusual. This one's been on the list since 2/8, since February 8th. This hit the list, and and I'm sure that the trigger price started off when it hit the list, even higher than this. I don't think I have it marked, but it would have probably been, just by glancing at the chart, it would have probably been like up here, sort of around a little bit over the highs of these few days here. So obviously the idea here is that when a stock starts to sell off, if it meets certain criteria, then it hits the pending list, and the trigger price starts, well above the current price, with the idea that it's going to sort of follow it down until the stock turns the corner, and then we're going to catch it on the swing cycle back up. So that should make a lot of sense. So here we are. This has got a ways to go to trigger in. Again, this could migrate down a little bit over the next few days, and so if I just extend this out here, and so maybe the stock, is in the process of bottoming out, and it turns back higher, and then we get filled, we get triggered in on the way back up, and if this comes down a little bit, then we get triggered in a little closer to the bottom. That's actually a pretty nice little sell down and pivot low reversal. Although you can see that this pivot low reversal day on Friday is almost mirror image of this one from 223, and it really didn't get any traction to the upside. But then again, we didn't get sucked in the very next day, and so that's part of the idea too. So these are the old triggers. This is the current trigger, and it is subject to revision on a daily basis. But for whatever reason, I mean, this still kind of looks pretty good. So we'll see what happens with that. So that's basically it. Real quick, I'll just we'll take a real quick look at the closed trades here, just to see what the deal was with the when this sell-off started, we had a few that had triggered in, right? And this ENPH, now this was the nasty one, right? As you can see, yeah, everything been going along pretty smooth in that with the market, but we had that nasty sell-off, and so these two, the Activision and Microsoft, real minor stop outs on those, tame stocks, but the ENPH, man, it just basically triggered in and then immediately rolled over and hit the full trailing stop, and it was one of those stocks that had an extremely large ATR, and so um, that's basically the out of the whole year, that's the only one that's really got a significant stop out. Like that was the only significant stop out so far this year. And of course, occasionally that's going to happen, but it is what it is. So, and we've got some really nice gainers that sort of make up for it. So all in all, so far so good this year. And occasionally it happens, because the market cycles up and down, and so there's a lot of talk that the market can't always go up, at least without having corrections, and so when you get into these corrections, you expect, and quite frankly, based on some of the charts that I've seen, even a stop out like that's not a huge big deal because, like we looked at quite a few charts where stocks, lost half their value. So that's just the way that it works. But that's why it's always nice to know that you got your stops in and the stops ratchet up, and so that's one of the beauties of the way that the system is designed is worst case scenario is a full stop out like that one. And quite frankly, in the big scheme of things, that's not that big of a deal compared to just, hanging on to something, thinking it can't go down anymore and taking an extremely large hit. So I would say all in all, things are going pretty well. So I'm going to wrap this up. Thanks for tuning in. I will see you guys back here same time next week.